Hey guys, welcome back to Stock Talk. I'm David. If you've been watching the past couple of videos, we've been going over Torchlight a lot and what's happening with that stock and what's happening with the merger. And so today I just again wanted to go into what was the catalyst that saw the price shoot up once again this morning. And then secondly, I've been getting a lot of requests to talk about, explain kind of my strategy with swing trading. What is it that I look for on the technical standpoint with stocks? What makes them look valuable to me, and why would I want to, trade and invest my money into a certain stock versus another one? So just to start it off, today with Torch, if you saw the update, this is about 7:30, 8 o'clock this morning, I believe it came out, that Torch had loaned $10 million to Meta. And Meta's purpose of using that money or receiving that money was to get a lot of their products out of the prototype stage and start moving them into bigger production. And that's a good sign because it just shows that the relationship between Torch and Meta is very strong and that they do like each other, so which I think is really good. And then secondly, I'll pull it up here if you guys can see it. This is in the press release for the company and on the investor relations page. And in the very last line of the statement, it says the remainder will be used for general corporate purposes, including working capital and merger related costs. So that's a really, really good sign that the merger is on. It's still happening and both parties have full intention of making this thing happen. So what that means for us though, is that we just need to pay attention to what is it that is going to move the stock forward? What catalyst is going to move it? And what I think is going to be that catalyst is it's going to be something along the lines of Meta coming out and saying they're going to give XYZ for stock in Torch, meaning they're going to have an X value. They're going to do something that's going to say this share is worth so much to us. And that's what's going to be the price that really either drives this thing up or lowers it down, right? So if we go back to the chart here, and again, just looking at the technicals while we're waiting for this to happen, I think there are some plays to be made. We saw a big shoot up here in price. This is last week, and then sell off, sell off, sell off. I think shorts definitely entered the chat. The Seeking Alpha article was definitely a hit piece. All the articles like that talking kind of the negative side of Torch. The disclaimers on the bottom of them that these guys are short, and so that's not helping the case at all. But I think it's firing up traders. It's like, no, we're not gonna be manipulated again. We're fresh off the heels of GameStop and AMC. That's not going to happen again. So today the news came out. That's what this big green bar is right here. It got all the way up to about 4.2 and then came back down. My level that I'd want to see this at and kind of feel comfortable going forward would be about 3.5. I think 3.5 would be a really good strength for this. And then as we get into higher prices above that, I'd love to see it over 4 and then eventually into 5. So I think there is some point for it. Right here, this is lower volume. And you can tell that even the volume, although it is red and it is negative, it's a lot smaller than what we've seen the past week or 2 weeks. You can see these giant green bars and even the red bars as well. So that's kind of interesting. Again, I would just wait until this thing hits over 3.5 and then I would start adding. So again, this is not financial advice. I'm not a financial advisor. Take everything I say with a grain of salt, but this is just my ideas and my creativity kind of just looking at this chart. All right. So moving right along, I wanted to talk about what I do when I'm looking for swing trades. What is it, things that I want to see? I have a pretty good example. I picked out a bunch of stocks that I could do, but for time's sake, I'm just going to use a really easy one and one that we've been talking about for about a month and a half in our Discord group. So we called this one out about a month and a half ago. It's Wells Fargo. Everyone knows Wells. There's one like on every corner in your city. The first thing that I want to do is I want to talk about what I even have on my screen here. So you're going to see a big green line. That's just a moving average, just a trend line. It's 180 days long, meaning it represents about 6 months of data. A trend line is 6 months of stock prices and data. And then the blue line is about 15. It's 15. It's an exponential moving average. And then it represents 15 days, obviously. So we called this out right around beginning of January. And what was really cool about it is that right when we called it out, we saw a big break. So that was awesome. I'm going to look at what happened during that breakout in price. And you can see here, right when we called it out, it was right in here. We're like, hey, the macro environment is setting up pretty nice for Wells. And then it started getting big breakouts. So on this day, it looks like on January 4th, it got a huge green volume bar. It popped up above this EMA, and then it pulled back, which is really helpful. We want to see a big green volume or green volume above this line. We want to see a pullback. That helps us to realize, hey, now might be a good entry point. It tested that line, and then it looks like into the pre-market of the next day, it tested it and then it shot up again. So that was a really good sign. And part of this was that it was heading into earnings. So this is a kind of a fundamental side point of this. It was going into earnings. It actually had great earnings. It sold off profit taking, and then it came back down. And we still held it all the way through because we know this thing has potential. And then from this support level of 30 bucks where we called it today, it is actually up about 30%. So a lot of my guys held the options on it. They made pretty good money. And so that was a really cool thing for us. Now I'm going to go back a step further and go to this initial breakout. You'll see on the bottom half of my screen, I have what's called an RSI indicator, and I have a MACD. Now this RSI just means relative strength, and it has has a top line and a bottom line. The top line is at 70 and the bottom line is at 30. Anything over 70 just shows strength. Anything under 30 shows weakness, or that the stock might be undervalued, right? So it's actually at a cool point here for this. About 40 was where it was at when this breakout started happening. And then it shot up. And you can notice once it hits above 70, stocks have a harder time moving up because traders are realizing this thing could be overvalued and it's due for a pullback. So we got up here to the 70 mark and then just consolidated, got a little bit higher. And then, like I said, it pulled back. The strength got really, really weak with it. And then it came back even further, got well below 30. It says about 20 right there. And then when it started moving back up above, it went above this blue line, consolidated, did what we just talked about, and rode all the way up. And then if we look at the MACD, which shows momentum, you have a blue line and you have this yellow line or gold line. What we want to see here are crossovers. So when the shorter moving average crosses the longer moving average, that's a key indicator of positive momentum for the stock. And it's a sign that this stock is going to move forward. This stock can have potential to really increase in value. Once these cross over here in this beginning of the uptrend for Wells, we saw the stock price increase about 20%, which is a pretty good margin. That's a really good trade, especially over 8 days. Swing trading isn't something where you want to get, you don't want to have like 100% in one day. That'd be awesome, but that's not what you're looking for. You're looking for a trade that's going to develop over a week, 2 weeks, 3 months. You know, I think kind of the sweet spot is anywhere between a month to 3 months. I think that's where you can capture a lot of volatility, get a lot of price action on your side, and you can, at that point, once you've held it for that long, you can start maneuvering in and out of your trade, adding or taking away, taking profit. So that's kind of where my sweet spot with this. And you can just see the MACD, it got to a good level, and then the momentum slowed down, it crossed over, and then this is an indication of a downtrend. So I hope that helps. Again, that's just a very quick shot into how I swing trade. I'm not big on day trading. It's not my forte. It's not what I'm best at. I'm a lot better at the swing trading. I had more fun that way. I can think more critically and put ideas together using a longer time frame. So that's what works for me. Everyone's different. If you guys like this video, you know, definitely check out the Discord. We have some really cool trades happening there. A really cool community of people who just like to get together, talk about stocks, like-minded individuals, and make a lot of money around the way. So thanks for watching. I appreciate you guys, and stay tuned for more videos.